So yesterday we got to finish our unadjusted trial balance, right? It was the trial balance that happens at the usually at the end of the month or at the end of a given period. So here we are. We just finished this, okay? And so now that we have this, what's going to happen is you're going to be utilizing this particular form to be able to help apply for the rest of the forms, okay? So your main goal is to successfully have your this one as well as your adjusted trial balance, okay? So the adjusted trial balance, what we're going to do is what we're going to be doing today, which is step number 6, which is doing our adjustment entries. Okay, so here, we match our unadjusted trial balance. So what's going to happen next is now we're going to actually officially start doing our adjustment entries and then close our books. So without further ado, let's get started. So here we are, and it says begin closing your accounting period. So what is the first thing that we encounter? Anybody?
Begin to close the accounting period, make adjusting entries,
For
convert periodic inventory, ending the inventory balance in ceramic coffee cups of 106.
Okay, so someone went down to the basement or whatever it is, and they counted that there's 106 coffee mugs left. Okay, so how are we going to journalize this?
By looking in the notes, there's a debit. There will be 2 debits, one for ceramic coffee cup and one for cost of goods sold.
Cost of goods sold. Okay, so let me see. Good. For the coffee mugs and the cost of goods sold. So I think we might have enough space here to squeeze in. We'll start from here. So since it's the end of the period, we're on June 30th. So the first thing I'm going to recognize is my coffee mug. So in my chart of accounts, what is the full name? Ceramic coffee mugs. Okay, what account number? 12050. Okay. So here we're going to recognize our inventory on hand. Okay. And then, like Mia said, we have a cost of goods sold. What was the account number for the ceramic coffee mugs again? 12050. Okay, and then we said that there's a cost of goods sold. Can someone tell me what that cost of goods sold is? Account number? 5150. Cost of goods sold ceramic coffee mugs. So here we go. We need to recognize COGS, ceramic coffee mugs. Okay, for 5150. Okay. What else do we need to recognize?
The
This expense
purchase
and sales
expense,
Okay, hold on. Tennyson said,
purchase expense.
okay, good. So Mia also said the same thing, purchase expense and freight expense.
mhm.
Now, what else is there too? Did we what else is there? Because it's more than just only those two things. So let's go ahead and take a look at our ledger for expenses. Do we encounter any contra accounts? So here we're under purchases, purchase expense. Do we have a contra account?
Purchase returns.
Purchase returns and allowances. Do we have any purchase discounts? Not yet, or we don't have any as of now. But yes, those are the only things that we need to recognize is we do have a purchase returns and allowances. Because this is a credit and we're going to zero it out, it's going to be a debit. So here we need to recognize purchase returns and allowances. And then we can go ahead and recognize our purchase expense as well as our freight expense. Okay? All right, so before anything else, why don't we go, how do we solve for the cost of goods sold as well as for the inventory on hand? Hello, anybody? Where do we go to solve for the ending inventory, cost of goods sold, and all the other things?
The inventory sheet.
The inventory worksheet. Yes, so you guys need to pull out of your memory cards chapter 5 and go to the inventory worksheet, which I think I did not load. So the inventory worksheet. Okay, so let's start on the coffee mugs. Okay, so we're familiar with periodic periodic inventory, right? So what costing method am I utilizing? Average.
Average, yeah. Weighted average.
Okay, so what do I do first?
All I have right now, the meals are just weighted average. I was gonna add them all together. The quantity, and then calculate the, and then total of the purchase and the freight cost.
I typed in the wrong formula.
240, 540. 440, I should say.
How many did you get?
440. 8 times 3 is
Mm-hmm.
24 plus, yeah, 440.
Okay, 440. Okay. How much was your total purchases?
I'm still adding.
$1,092.20.
Got it.
Okay, hold on. This is not. It says it is. Okay, so let me just type it in equal sum. And you said it was how much?
$1,092.20.
Good. And what's your total freight?
500.
500. Whoa. Okay, let me clear that up. I'm missing a border here. All right. So what was this one again? 500. Ay, oh my God, what is going on? So you said 500. Good. What is the total cost going to be?
$15.92.20.
50.92.20.
$15.92.20.
50, good. 15.92.20. And how do I solve for my average cost per item?
Total cost divided by the quantity.
Total cost divided by the quantity, and what do we get here?
3.6186.
3.6186. Now, there are a few notions that you can do here. Now, this is assuming if you don't have any returns and allowances, but we do have some returns and allowances. So therefore, this number that we calculated is not going to be the one that we use because we need to get our real total cost of what we actually have. Okay, so let me expand this. So what is my total quantity of my purchases?
440.
At how much before freight?
1092.20.
Okay. Now, do I have any returns and allowances?
Yes.
Yes. All right. And let me total these up. All right. So how many total items did I return?
9, and then it has 431.
What do you mean it's 431?
I subtracted 440 minus 9. Or do we not do that? Because we don't have 440 is when it comes to quantity because we return 9.
Okay, I see what you did here. So you already went ahead.
Oh, okay.
Okay.
Well, I'm slow now.
So here you go. Here's the 9. So here it tells us that we need to subtract or what your subtotal is. So for 40, subtract 9 gives you a grand total of 431. Okay. What about the cost? How much was my total cost for the purchase returns and allowances?
I got 19, isn't it? 21, 22, 24.
Right, 22, 24. All right, same thing here. We're going to subtract them out. So what is our grand subtotal that we have here?
1070.
1070? Oh, did you round up, right?
It rounded out.
Okay, that's fine. 10, so 1069.96. Okay. We know freight doesn't add anything, but how much was the freight?
500.
500. So let's go ahead and add up our new total purchases. So we have 431, and we have this added the 500, and what do we get?
1569.96.
Okay, good. Now, of course, we just started our company, so our beginning balance is going to be 0. And then we just carry over our purchases from above.
431.
All right, and our total goods available is going to be these two numbers added. Okay, so this right here is where you start calculating your new average cost per item. Since you have your total goods available, that is what you're going to be solving for. So I'm gonna go ahead and utilize my little table here. Okay. And I'm gonna go ahead and solve for my cost per item. So what is it? What's my average cost per item?
One five six nine 36 divided by 431.
That's what I was doing. 370, 52.
370,
I got 364.
364. Okay. 364, yada, 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 yada. Okay.
Right. Yeah, yeah.
Okay. Good. Now, what was our ending balance in our inventory again?
106.
106. So how much did we actually sell?
325.
325. Okay, so this is where you have the choice. You either solve for ending inventory or you solve for the cost of goods sold. Okay, so what do you want to solve for?
Cost of goods sold.
Cost of goods sold. So how many items did we sell?
What again? For 325
Mm-hmm.
and 326, 10, 11, 78.45.
11. You got 73?
Yeah.
All right, so you rounded too early.
No.
It's 1183.84.
55 times 3.6, 45,986. You're right. 1183.84.
Okay. So now that we have the cost of goods sold, right? That's how much we sold out of our entire inventory. So I'm going to go ahead and copy that over here. All right. How do I solve for my ending inventory?
Subtract the difference.
Mm-hmm. And the difference between what?
The goods available
Mm-hmm.
and COGS.
Good. So how much do you get?
413.11.
Okay, no, I did not get that.
Again, I was on 11.55, so that's where I get confused. Again, some are rounded and some are not, because just like the other one a while ago.
This one we are not rounding until the very end because we're selling, well, we're selling larger amount of units. So every penny counts. If you rounded too early, you probably would have lost a few pennies somewhere. Okay? So there you go. This is unrounded. Okay? So there you go. So these are the numbers that we are going to appear here. So now we need to go ahead and plug those numbers into our journal. So let's go ahead and do that. Okay. So what was my total ending inventory? 386.12. What was my total cost of goods sold? 1183.84. What was my total purchase returns and allowances?
150 something. Okay, I don't remember the figure.
It's on the screen.
2224. I'm sorry.
2224. What was my total purchases?
Okay. 1092.20.
1092.20. And what was my total freight?
500.
All right, now let's go ahead and utilize our debits equals our credits, and do they match?
They do.
Okay.
1590, 20.
Okay. So Adina says they match. So yay, we successfully did our conversion entry. So what are you going to write for your note here?
Ceramic mugs, inventory.
Mm-hmm. You can also write
Ending.
conversion.
Okay.
What else did you say, Lynette? Did you want to add anything else, like how many mugs you have left?
106 on hand. Oh, just 106 is it.
Okay. Right. All right, can someone help me fill out the rest of the account numbers?
Purchase and returns 61,500. Purchase expense 61,000. Freight 62,000.
Okay. Good. All right. So, what is next?
You have to post to the ledger.
Post it to the ledger. Yes, ma'am. So here's the ledger. Where are we going to start off with?
Ceramic coffee mugs.
All right, we're going to start with our inventory. So, here's my regular coffee. Here's my supreme coffee. Here is my ceramic coffee mugs. All right, so 630. What are you going to place here?
That's a good question.
Sold?
We didn't sell anything. This is us transferring the from in expense to inventory.
So we can say conversion.
Conversion, okay.
Um, Inventory left 106.
Okay, 106 mugs on hand. Okay. Post reference.
GJ 2021.
Yes, GJ21. All right. And how much did I debit my account for?
$386.12.
38612. Bringing my beginning balance to be 3612. Okay. What else what's next? Cost of goods sold. Okay.
Did you format the cells for the Excel for that?
For which one?
For the ceramic mugs?
Format the cells meaning what? Like,
Did you do the formula?
no, not yet.
Okay, now I was just wondering because I'm working in tandem with what we're doing, so.
Okay. No, for this one, since there is no, what do you call it? Like this, there's no long, we're not
Gotcha.
making extra information or like this, like where it's more than one. Then no, there is no actual formula yet in here.
Okay.
Okay, so the cost of goods sold. All right. How many coffee mugs did we sell?
431.
431. Post reference,
GJ21,
GJ21. And what's my debit going to be?
1183.84.
1183.84. Since this is my very first entry, it's only going to be 1183.84. Okay. Then we got to go to purchase returns and allowances.
That's in the expenses.
Okay. Okay, here I am in purchase returns and allowances. So it is the 30th. What are we going to place here?
Ceramic mug inventory, maybe?
Yeah,
Does
you
that
could do
make
that.
sense?
Mm-hmm.
Okay. Is that enough information? Or should there be more?
You could probably add conversion as well.
Okay. What we
So
can
then
add.
you have that, so you know where the coffee mugs are right now because of the conversion. Okay. GJ21. So now we're going to debit the account for, okay, yeah, to zero it out. All right. So therefore, if I pull my formula down, it should reflect 0. Okay. So Adita, do you know how to do the formula?
It's already in that one.
Okay, perfect. Okay. So there you go. Here we are zeroing out our expenses. That's exactly what our goal is to clear out all of our purchase expenses because we ultimately placed them all into inventory and also our cost of goods sold. So here, good. We zeroed out our purchase returns and allowances. So next thing that we got to do is we got to zero out our purchase expense. Okay. So what am I going to do here? What's my entry going to be? Or description?
It'll be the number of coffee mugs that we purchase. I don't have, let me see. If you can go back to the scenario, I can give that to you. And then it's post reference GJ21.
It's either 440 or 431. Are we doing the actual number or the purchase?
This is the total purchases. So with that, we already, the returns and allowances is already down here.
Okay.
Okay.
So will we just put conversion?
What's
That would be
oh,
a little better, yes. So conversion,
oh,
and then we can actually be specific since our purchases are not specific. So we can say conversion, just write mugs.
ceramic coffee mugs.
To inventory. Right? 21. And how much did we credit our account for?
1092.20.
Okay, so therefore, my new ending balance should be 0, right? 0. Good. All right, now last thing we have to do is the freight expense. Here we are, freight expense. Same thing, conversion, mugs into inventory. GJ 21. And I credited my account by 500. Bringing my account to now to be 0. Right? Good. So there we complete our conversion entry. All right. So what has happened next? I'm going to start on our new page since there's no way we can add a transaction there. So we're starting on page 22 now. So what has happened here?
We have cost of materials sold.
We have cost of materials sold. All right, let's look at this information. We sold a total of 5,297 medium cups. We sold 4,331 large cups. We sold 120 pounds of sugar. And we sold 22 cases or used 22 cases of the creamer. So now we're calculating what we actually used or what we actually sold. So here's the costing per item, and I've already calculated the cost for you because, again, this is not our job to calculate. Our job is to just record. So how am I going to record this piece of information?
Debit medium coffee cups.
Okay, now are we increasing our business supplies or are we decreasing them?
We're decreasing it. Okay, so that guess was wrong. I'm gonna sit back and listen.
Right, but that's a good try. So at least you know that that means all of these accounts that we see here are going to be credited, right? We're going to credit our medium coffee cups and we're going to credit our large coffee cups and sugar and creamer. Now, what is going to be my debit account? What's my equal and opposite counterpart? Now, let's look at the word carefully. What is cost of material considered? Use your chart of accounts to find it. It is an expense. Good. It is an expense because we're utilizing it, right? We're spending it, right? So good. It's an expense.
Okay, so we'll have to do COGS. So would it be COGS coffee, medium coffee cups?
Let's look at our chart of accounts. Do we have a COGS medium?
Yes. Oh no, we have a cost of materials.
Cost of materials. There you go. All right, so here you go. We have cost of materials, medium coffee cups, cost of materials, large coffee cups, sugar and creamer. All right. So okay, so let's go ahead and journalize this. So 6:30. All right. We have COM. Okay, so these are all the costs of materials. So these are the items that we used in our system, right? Right now, my balance in my business supplies, right? I might have bought X amount of cups. So now I'm adjusting by saying, well, what do I actually have left in my actual supplies. So in this case, here you go. Then I am going to credit my medium coffee cups. And I'm going to also credit my large coffee cups. Okay, so very similar to cost of goods sold, right? Same concept. Right? Now we're adjusting our actual business supplies. Okay. So can someone tell me what the account numbers are? I completely forgot what they were.
Medium is 51,200,
51,200.
51,250, 51,300, 51,350.
And my business supplies should be like 11, 7.
Okay, 11,760,
11,760.
11,765,
Oh, 11,765.
11,770, and 11,775.
Thank you. Good. And I've already done the calculation for you, so we utilize a total of $286.70 worth of the medium, so 286.70. How much was the large?
351.53,
And how much was the sugar?
43.20,
And how much was the creamer?
35.90.
Okay. And those numbers are going to be exactly identical to,
Okay.
because that's how much we're going to be decreasing in each account. Right? There you go. Okay. And my note here, you can type here, adjusting business supplies. Okay. All right. So where do we need to go now?
General ledger.
Let's go to the ledger.
We're going to go to the ledger. Okay. So we're going to go to COGS first. All right. And here we see cost of materials. First one is the medium coffee. Here you go. So what am I going to place my information here for?
Adjusting inventory,
Okay. Not inventory.
cost of material. I don't know, but it's an adjustment.
It is an adjustment. But what pertinent information do we know? What do we know about the cost of materials? How many cups did I use?
For medium cups, we use 5,297.
Good. Okay, I'm going to write used 5,297 cups. Okay. General journal number 22. All right, and how much my debit is for?
$286.70.
$286.70, making my beginning debit balance to be $286.70. Okay. All right, what about my large cups?
For 331 cup.
Okay, post reference 22. And how much did I debit my account for?
351.
$351.63, making it my beginning balance. Okay. Next is sugar, cost of material sugar. How many pounds of sugar did I use?
120 pounds.
Yes, we used 120 pounds, right? 22. And how much did that cost me?
4320.
$43.20. All right, making it my beginning balance right here to be $43.20. Okay. And then lastly, my coffee creamer. How many cases did I use?
22.
We used 22. All right, general journal 22 for how much?
359.26.
359.26. 359.26. All right, good. Bringing my beginning balance to be 359.26. Good. Now, lastly, we got to go to our actual assets and adjust as well or update our business supplies. So here is my bank. All right. Here we go. Medium coffee cups. So how many cups did I use?
5,297. Credit 286.70.
All right. Bringing my new balance to be
92.17.
92.17. Okay, 92.17. All right, so that's how many items we have left. But of course, if you want, excuse me. If you want to calculate this down to, like, down to its core, right? If you can see, we've been keeping track of all of our inventory, not inventory, sorry, our business supplies, right? So we bought a total of 7,000 cups. If you'd like to, you can also add it in there saying that you should have X amount remaining. But in this case, you don't have to. You can place it in the gray right here of how many cups you have remaining. Since we're going to close out the books anyway, it's always going to be good to know that you have X amount of cups left. It's whatever you want to do. Okay, whatever keeps your information pertinent as well as keep your information updated. But what's going to happen is the next month you're going to have a completely brand new spreadsheet. And what you're going to do is you're going to transfer all of your assets, all of your liabilities, and all of your equity accounts over because those are permanent accounts. They never close. So you're going to be transferring all this information and just having this one line right here saying at the end of June 30th, you have X amount left. Okay? So in this case, I have $91.17 left, which, I can either calculate. I can either calculate what total amount of cups I have left. But that's just if you'd like to. Okay. Now moving on to my large coffee cups. So how many cups did I use?
4,331.
Right, J.
GJ 22, 351.63. Bringing
Bring
the total to 1670.
You said 216.70?
Yes.
Perfect. Okay. And sugar.
Used 120 pounds. GJ 22. Credit 43.20. Should bring the total to 2160.
You say 43.40?
43.20.
43.20. 21.60. Good. And then lastly, my coffee creamer. How many cases did I use?
22.
All right. What's my general journal?
Used 22 cases.
Mm-hmm.
Should there be any extra or no?
What do you mean extra?
I'm just, as far as it goes with notes, that should be enough.
That should be enough that you use 22 cases. Like I said, if you'd like to add information, whether you want to place it in the gray, place it in there, that you have this X amount left, you may do so. But in this case, we're only learning the first month, so I'm not going to have you do
The
this yet.
credit is 359.26, giving
Through
you a total of 179.63.
179.63, 179.63, 179.63. Good. Good. So now we adjusted our business supplies. All right. So what is now next? Here, let me zoom out. There you go. So what has happened next? What occurred here?
We received our bank statement.
Yes, we did.
Looks like it's time to reconcile.
In this case, yes, but we don't obviously have the actual reconciliation that you have to do. So what we're going to do is we're just going to journalize what we got charged for. Okay, so here, let's look at our overview. So we did have the overdraft protection fee. And because it was, what did we have? 22% for every $1,000 that you go over. So now we have a total of $660 worth of interest that we got charged. Okay. And we have to also, we had a bunch of NSF checks, right? We wrote a total of 5 checks that we wrote. So every check that we wrote that has an NSF is charged $25. So in this case, we wrote 5, so we have 125, and plus the bank charged us an additional of $50 for using their service. So in this case, we have a bunch of bank fees, and we just need to make sure we adjust our what account? What account do we adjust?
Operating expenses.
Okay, that will be for our expense. Okay, so let's go ahead and let's look in our chart of accounts. Do we actually have an account specifically for this?
Yes.
What is it called?
It should be. It should be service charge. I'm looking in operating expenses now.
Mm-hmm.
Bank fees.
Bank fees. All right. Good. Because it's an expense, right? Because every month we're not gonna get charged this every single time, right? We can not have many charges. So bank fees is going to be it. And what account number is that?
6,100.
6,100. All right. And can you tell me what the grand total is of the amount that I got charged for? 3,835 is correct. Okay, and where do I actually do this? Now, when you get your bank statement and you see that you got charged all this, what happens?
Money comes out your account.
Money comes out of your account automatically. So you're just getting billed saying, well, this is what happened. You don't even have to pay it because it's already been taken out. So what's my credit account going to be?
Checking.
It's going to be your checking. For 835. And what's my note going to be here? You can write bank reconciliation.
I just put bank fees for insufficient funds.
That can work too. Bank fees.
Should we just put NSF?
Fees and charges.
Yeah, it's also charges too.
ODB. Overdraft shipper. No, no, it wasn't overdraft. Overdraft shipper.
Okay, good. Now that we have all of that configured, so what comes next?
That ledger.
Next comes the ledger. Okay, so here we're going to go to operating expenses to find our bank fees account. Here it is, bank fees. Okay, you could do bank statement for the month of June or bank charges for the month of June. You can do NSF and write down all the check numbers that you wrote bad checks for. You can also do how much you went over. Whatever pertinent information you want to place in here. Okay? And in this case, I'm going to say
I would do the checks.
okay, NSF overdraft and service charge. Okay. And where you could place all this information is obviously going to be in your notes to your financial statements, which in this class, I'm not going to have you guys do because you have all the information in your actual scenarios, right? Whether you keep note or put it on a document that's attached to this is where you can do that, okay? So you could explain how much the percentage of interest that you're going to get charged for overdrafting. You can also place in information such as this is how much they charge for every check you overdraft. So all that information, you can reveal that in your notes to the financial statements. Okay. All right. General journal number 22. How much am I going to debit my account for? 835. And because it's the first time, our beginning balance is going to be debited for $835 even. Okay. Then lastly, we got to go to our checking account and we need to update that amount because it's automatically charged right out of our bank account. No questions asked. Okay. General journal number 22. And how much am I going to credit my account for? Bringing my account balance to be
$12,861.58.
good. $12,861.58. All right. Good. Okay. So let's go ahead and see what has happened next. All right. What happened here?
Replenish the petty cash fund.
We need to replenish the petty cash fund. All right. Now, with this, I will give you one big hint. All of these are going to be considered a business expense. Okay? So you don't have to itemize it. Okay, but here is my little register that I have attached to the petty cash fund. I have that I took out $187.16 because I bought 10 pizzas and sodas. We have Irene taking $23.80 for a cake. We also have Albert taking $71.82 for party streamers, balloons, plates, and etc. Party supplies. Okay. So with that being said, because this is just a minor business expense, I'm just going to categorize it all as one. So what account is going to be your business expense?
Petty cash?
No, we do not debit or credit our petty cash fund unless we have the circumstances where we're either establishing it, increasing it, decreasing it, or closing it out. So in this case, we're replenishing it.
So then we would do checking.
Checking
Business expense.
and business expense. Right? In what order? What comes first?
Business expense would be credit.
Why would business expense be credit?
If you took it out from the petty cash. And checking, you have to, whatever, the petty cash, the
Would it be checking first because we're taking from the checking and then business expense because we're replenishing it?
Well, okay, so what does debit, if you're going to debit your checking account, what does that mean? We're adding.
replenishing the expenses.
Exactly. So are we adding to our checking account or are we?
No, we're not. We're subtracting.
Correct. So,
So business expense would be debited?
yes. And about 95% of the time, business expenses are always debited. Unless you have a contra account for any reason, such as for purchase expense, then yes, you can have a credit in your expenses, but that's only situational. But most oftentimes, most all expenses are debited. Okay, so here we're going to debit our business expense.
$62,000 or 6,200.
6,200. And we're going to credit checking. All right. Now, how much am I going to credit, or how much am I going to replenish the petty cash fund for? 2380 plus 7182. And what did you say you got? 28278. So how much is my check going to be written out for? Good. Okay. So again, my petty cash balance should always and be for whatever you established it for. And I believe we established it for $500. So with this reimbursement, right, we have a total of $282.78 worth of receipts, and we have the remaining amount in cash. The petty cash fund must always be full of cash. Okay. So here, what is my little note?
Replenish, petty cash.
Good. Okay. Replenish petty cash fund for party supplies. All right. So what is next?
The ledger.
Ledger. Yes. Okay, so here we are. We need to go to our operating. Okay. And we're going to go to business expense, which right here. Right? Party supplies for grand opening. Okay. General journal number 22, and we are debiting our account for
282.78.
282.78, bringing our new balance to be 1282.78. Good.
That formula is, what is the formula for that?
So you're gonna up one, add any debits, subtract any credits. Right?
Gotcha. Thank you.
Okay, so there you go. Then lastly, we gotta do is we gotta update our checking account. Let me make sure this is my checking account. Okay, yes it is. So 630, right? replenish petty cash fund. $22
Yes.
for 232
82,
through 82.78. Okay.
should be $12,578.80.
$12,578.80. Now, what is the one rule that we have to do when it comes to the petty cash fund?
We have to, go ahead, Lynette.
Has to be handled by the assigned, the manager or assigned cashier or whatever.
Okay. All right. So,
And has to be balanced. The receipts has to be altogether, those expenses as a proof.
what else? How do you replenish it? What do you have to do? You have two
Write a
choices.
check.
Write a check.
Either you write a check, or if the owner is the manager, then the owner has to go to the bank and either take the money out. But in this case, we have to write an exact amount, right? So in this case, we do need to write a check. So let's go to our check register. All right, 630 for 282.78.
Yes.
And because we do have an owner, his name is Bob Mason. We're going to write it to Bob Mason, or we can write it out to petty cash. That's what I have up in the above. So whoever the petty cash person is what you're going to write their name for. But in this case, just to let you know who the petty cash manager is, I don't know who, you're going to write it out to petty cash. Okay, so here I have a check number for 1531, so that could be something you can add here as well. Check number 1531. And I'm going to also update that in my journal as well. $15.31. Okay. So here, what happened here? What happened here?
We estimated the allowance for doubtful accounts based on 5% of the accounts receivable balance.
Okay, so what does that mean? What does this mean? What does this mean?
We go look at our accounts receivable ledger and see what the balance is, and then calculate 5% of that.
Okay, all right. So here's our ledger in our accounts receivable. So that's petty cash, cash in register. Here's accounts receivable. What is our balance going to be?
$1531.95.
$1531.95. So can someone calculate what 5% of that is? 1531.95. Was it 95? Yes.
76.60. I'm rounding it off to two decimal points. Otherwise, it's 76.5975.
I don't know if it's correct, but I got $76.60.
Yeah, because it rounded up.
Round it up.
You say 60 cents?
Yeah.
Okay. So I got 76.60. All right. Now, how am I going to record this? How am I going to record this?
Is it a debit to announce for doubtful accounts and a credit to accounts receivable?
All right. So you're saying that. Now, question is, if you're going to be using the allowance for doubtful accounts, what criteria do you need to meet in order for you to safely remove or safely, remove from accounts receivable? There are 3 things you need to know.
Say that again.
So there are 3 things that you need to know in order for you to safely remove from accounts receivable into the allowance for doubtful accounts.
What chapter was that?
Chapter 10.1. Okay. You have the answer, Adina?
I'm looking at it, and but I need you to. You said there are 3 things that we need to know.
Mm-hmm. All right. So I'll go ahead and let you guys know this. So, do we know who is faulting on their payment?
Do you know that the debt is uncollectible in the period?
No, we don't know who. Do we know when they faulted on a payment? And do we know how much?
No.
No. So therefore, there's one more thing that we can safely do because we meet the criteria, right? We meet 1, we do not know who. Second of all, we don't know when. And lastly, this is an estimated amount, so we don't really know the exact amount. We know by an estimate. And what do we do when we do this? And it's an adjustment entry.
It's a bad debt expense.
It's a bad debt expense. There you go. Good job. Okay. So this is where we
I have
don't.
a question.
Go ahead.
For bad debt, is it during the end of the period, a year?
It's
That's when we know to use it as well?
all right. It's whenever that you feel that your business needs to take the necessary measurements. Now, as a small business, you're more likely to probably do it either quarterly or even annually. But in this case, I want to just have you guys practice doing it. So in this case, we have a whole bunch of customers, right? We don't know who they are. We don't know if they're going to pay us or not. So here in this case, we're just going to take the safety measurement of 5%, right? Usually businesses are allowed up to anywhere from 5 to 10% to actually claim a loss. So in this case, we're applying that concept, right? We're applying that, it's potential that 5% of our actual sales is going to be uncollectible. I don't know if I answered your question. I can't remember if that was the question or not.
Oh, yes, you did.
Okay. So in this case, for major corporations, right? If you're having billions of people owe you money, you can automatically assume that every single one of them is not going to pay. So you can definitely go ahead and do it on a month-to-month basis. All right? So then at the end of the year when you file your taxes, you can just take that whole chunk out in one go because you've already done it every single month. So, yes, but for small businesses, it's not necessarily unless you have a customer that's shown a trait like this before, then that's where you can kind of like, ooh, we got a red flag here. There's, if you have a customer that does do an account and they say, I don't want to pay you, then that's where you can get the red flag and you may have to do this, whether it's a month-to-month basis or quarterly or annually. Okay, so in this case, yes, we recognize that it is a bad debt expense. All right. And it was for $76.60. Okay, so where do I actually have to take that amount out from?
Do you take it out from allowance of doubtful accounts?
Yes, that's correct. Why can we not take it directly out of the accounts receivable?
Because we haven't received it?
No. What are the two methods of writing off bad debt?
Direct write-off method and allowance method.
Correct. Direct write-off allows you to take it directly out of accounts receivable, meaning you're never going to claim that ever again, so you can directly take it off. But in this case, the allowance for doubtful accounts says that it's a potential that this person can give us the money back or pay us back. Now, why can we not ever use the direct write-off method?
Because it's for tax purposes in the IRS.
Correct. And you are not the tax accountant. So therefore, we must use the allowance method. And in this case, I used the balance sheet method because I am taking it directly out of my accounts receivable. So allowance for doubtful accounts. All right. And can somebody tell me what are my accounts for bad debt and allowance for doubtful accounts?
Doubtful accounts is 11,100.
11,100. Oh, 11,100.
Bad debt expense is $65,000.
65,000. Okay, and we know it's for $76.60. Okay, and then in parentheses, what am I going to make a note for?
Estimated allowance for doubtful accounts.
Okay, estimated bad debt.
5%.
5% of AR, accounts receivable. Good. So then we got to go to the ledger. So we know where bad debt expense is, right? We know that it's going to be under an operating expense. So let's go ahead and go here, and it should be one of the last things that we encounter. Here you go, bad debt expense, right? So we're going to go ahead and debit the bad debt expense. So here you can say 5% of accounts receivable is uncollectible, right? General journal, 22, and we're debiting our account for 7660, right? And we know that's our first balance here for 7060. Okay. And then where is our allowance for doubtful accounts? Okay, in the assets. Under what?
It's under
Current
checking.
asset? Current asset.
It's a current asset, good. Under checking, it's not under checking.
No, I'm saying it's under, it's accounts receivable.
Under accounts receivable, why?
It's the contra account.
It's the contra account to accounts receivable. Good. So here we go. You can write bad debt. 5% of accounts receivable. And we're going to credit our amount for 7660. All right, bringing our credit to be 7660. All right, and this is going to be like that. So the main account is actually accounts receivable. So what's going to happen is it actually supposed to reduce it, correct? Because it's a contra account. However, when we complete our adjusted trial balance, I'm going to give you the option. Do you want to do? Actually, no. I changed my mind. I want you to use the main accounts because it's going to help you complete the rest of the financial forms. Now, of course, you don't have to do it. It's not a requirement, but it should show you the difference pretty straightforward. And it's going to shorten up your accounts list as well because now you're eliminating a bunch of other things that could be consolidated under one, right? But we'll talk about that when we reach our adjusting trial balance in a couple minutes here. Okay, so good. We completed our allowance for doubtful accounts and we've completed our bad debt expense. Now, right now, it is exactly 10 o'clock. So what I'm going to do is I'm going to call break here and we shall resume in 15 minutes and we will continue doing the depreciation. So I need you to get your depreciation tables out.